Sunday. I love Sunday. 9:26 a.m. 7/24/2011. I have a stock called Baidu, Chinese search engine stock. When we were trading Baidu, we did very well shorting the tops. It's on the stockmarketfunding.com home site. Just go check in, click on Baidu. And when we were calling the tops over here in volatility was at the end of April, and we said we're going to have a big correction in Baidu along with the broader markets. And the put options here proved out. Then we hit a bottom down here at 114, and we said, hey, that's over. It's time to get net long. And that we did some very good trend cycle, mathematical trend cycles, and it was time to be long Baidu. And Baidu has run that course right back up to the highs here. Right back over here to where that downtrend. It was a great short and a great long. Okay, and that's the SMF platform. They're going to report earnings after the closing bell on Monday. And we know that. This is a weekly chart called standard chart, different than our MMT. And that on a weekly level, we're at about 73.97% DS. Over here at the top, we're at 89.7. So this weekly percent DS could still go longer. When Baidu closed 1 week, 2 week, 3 week, 4 weeks below the 10-week moving average, that consisted from a bull trend to a short-term bear reversal. And now on the flip side, we've had 1 week, 2 week, 3 week, 4 weeks above the 10-week, which consists now of a new bull cycle versus its qualifying bear cycle. And SMF have bull and bear cycle qualifiers using weekly moving averages. We're going into the earnings, and we've rallied up going into the earnings tomorrow after the close. Unlike Netflix has sold down going into the earnings, they're pricing in a good report. And as we all know, we have been 100% correct that during the earnings, just like we did on that Apple trade to the upside, said Apple earnings is going to be great, nothing wrong with them. But in after hours, shortened that Apple up there, hit 405. And that stock hasn't seen. In fact, it went from 405 in after hours down to 383. And it was buy the rumor, sell the news. Any gap up will be a short on Baidu. I guarantee it. That means that a big pop to the upside is going to warrant a put transaction right after that on Tuesday morning on the opening bell, and vice versa. If we sell down all the way here, then we would be looking at getting that long. Ken Flag, 10-week moving average is at 136.19. Ken Flag, 20-week moving average is also at an intersection at about right there at the same price, 136. Below the market Ken Flag of a rising 40-week moving average with that lower Bollinger Band. This is a 50-week. I'm sorry, the 50-week is the pink line. It's been rising. Everything has been bullish about it. That's how you know when to buy the dips. Sell short, overbought, and buy the dips. Now, the thing about it is Flag, you must write down the 50-week moving average right here. And you can take a screenshot, 116.85. So when we had the reversal down here, that rising 40-week with this weekly up move was the time to be net long, and we were. We weren't wrong, and we would go up just like we went down. So what? Bear reversal, bull reversal. What do we care? What we do care about is the finite part of learning how to trade an earnings season, and the after effect of that earnings season is where does one trade management get logged in, and how do I make good of it? We're going to go into that part now. All right, let me take this call real quick. Now, I may have not included the 10-month, but the long-term 10-month rising moving averages, the double top is an extreme move. Earnings are priced to perfection. Once again, I'm not sure if it was in the last segment on this video, and where the breakouts had occurred over here, and how monthly moving average crossovers, there's mathematical equations. The bigger the price between the two, the stronger the bull rally is. I'm not going to go into that today. We're priced to perfection on Baidu. It's all about buy the rumor here, sell the news. Tomorrow night they report earnings. We're going to go into another segment using the call and the puts and how to be in Baidu for one way or another, just like the Netflix, just like we did the Google, just like we did the Apple, just like we're doing everything in this July earnings season, is knowing when to be the seller when the people are all bullish and buying. There's nothing to be bearish about. I didn't say that, but you got to know that at a certain point in time is how to take the other side of that trade based on its price volatility after the closing bell tomorrow. Now, we're going to get into the call and put structure. Man, this thing, I'm sorry, here's the weekly part of the chart. Again, the good news is being priced in. The 140 put below the marketplace is clear down here at $1.40. The 170 call up and out of the money on the weekly expiration. It expires 7/29. We report earnings tomorrow, so we have 4 days until these things expire. Okay, we're going to be buying the put option below the market because of the volatility in Baidu, and we're also going to buy the 170 call up and out of the money because Baidu could gap up $20, $30 as well. So we have to be in play for both upside volatility and downside volatility risk. Both of the contracts are at about, this one here is now $1.50. So if we had 5 contracts here at $1, that's $500. Over here, and we did that Google trade. You can go back and look on the stock market funding site. We did the same thing there. These down here, if we could get these for, $1.20 or $1.30 below the market, that puts us in play for both. That puts us in play for both the upside volatility and the downside volatility. And that's the contract that we're looking at. And we've already used our MMT platform. And we know that Baidu has ran to its highs. So when we go over and take a look at the August contracts, they're going to be much more expensive. So what we'd be looking at here for August is we could see that the put contract down here, they were up here, the highs up here on 6/21, they were $15 a contract. So when we're buying these down here, and the August contracts are the monthly, that's the 130 put. Of course, you can see right here in the option chain, they're going to be much more expensive than your weeklies. So when we're looking at this one here, we look at the 130 put below the market. It's cheap. It's not inflated. If you were buying contracts up here, when Baidu was breaking higher on the daily chart and the weekly chart, and Baidu was breaking out the last 4 weeks, I took this premium all the way down to its all-time lows. $1.01 was its low. And right now, it's low on Friday. Well, still like it. It's $1.20. So we'll buy some August puts for downside volatility, and the 170 call up and out of the money is inflated. It was down here at $1, but now it's kind of toppy up here for that 170 call. So it's expensive. So we would only buy a few of these contracts here because it's not like we're buying wholesale down here. Okay, they were 90 cents. And the highs here was $3.90, and this last high over here was $3.75. So the risk is that we've got to have the right entry weighting to protect this money up here. Yes, you can pop and get more inflated on the 170, but not too much more. So the upside is probably to between $8.50 and $10 to the upside here. And if this was to go the other way, well, these would simply come down to zero by a nickel here. Okay? That's the best way to trade Baidu when we're looking at the August contracts. The other side is that we can reduce this entry here, and it doesn't have a lot of data on it. It is a 180 call up and out of the money, and the lows over here could have been bought at $1.27, and the highs up here at the time were $2. So this is way up and out of the money, and it's $1.40. So we could buy 5 of these calls here, and we could buy 5 of these over here. Baidu, Yes, it does. Yes, it has a 20 now. Now in after hours, Tina, it has about a $20 ratio one way or the other now. That's in after hours now. On a good report, they like to take it up about 20, 15 and $20. Now 3 deltas up and 3 deltas down. And yes, on a good report, they love to spike that thing about that a dollar movement, and they love if it misses the report, well, they like to slam it about $20 down too. In a lot of cases could be 30, 40, $50 to the downside that we've experienced. And there have been times, the best one that we ever did was $90 gap on earnings. Better than Google. Okay? And the thing about this whole thing is that we ran in anticipation, and we're right back up at the all-time double top highs there. So any disappointment at all to where the current price level is, from 114 back to 154, is that we ran in anticipation. All the short sellers have been taken out. All the bears have been hammered out on that last 4-week upside. And all the bears have been taken out of the market, so there's very little short interest on Baidu. That means that if it misses its reports and it does gap down the previous morning, as it will, that means there's going to be very little support levels, and it could trigger even more of a downside move because there's very little stop market orders in the market, meaning that there isn't any short interest to buy. Okay, so it just depends on the gap, and I don't know that until I get into the gap and to the report. And I can't sit here and say one way or the other as to what that would be. Generally, as you know, depending on the report, if it's a huge upside move, we're going to be taking half of it off the table. Okay? And then we're going to look at shorting the equity or going long the equity as well, outside of the calls and the puts. Same thing we'll do with Netflix. It's going to be a really good trade. And the thing about it is our dollar cost risk capital is minimized. Whereas if you're going to go something like this into the earnings and you were to go to an August contract and you were to buy a call up here at $7, these are inflated. And if you were going to buy a put option down here in the money, which is a 160, yeah, they're deflated, okay, but they're $12 a contract. Yes, and the range from 22 up here to 12 is only $10 here, okay? So when we start looking at these various spreads for the August contract, this 130 seems to be the best one because this thing was $17.20 on 620. And they've taken out $15 premium, which makes this much more attractive, don't you think? Compared to the risk that one would have buying $5 above the market. There's a lot of high risk there. And that's just showing the difference between the 160 call August and the one, and let's go back to the 160 put once again. That this is the difference in the cost structures here. It costs a lot more money for protecting the downside here. It costs a lot more money up here because these have ran off the lows. Even from $2, they've already made a $5 move in this particular contract. So I believe that we will stick with that one here, and we can go with the 180 call. And at least that the dollar cost risk, dollar and some change down here and a dollar and some change up here, and Baidu makes a big gap up or a big gap down, we come out ahead no matter what. And this is the earnings preview once again, folks. The thing about it is that we've already rallied into the earnings for tomorrow. It's not like this one, the Netflix one that we're looking at tomorrow night. They both report. This thing is sold off $34 to its long-term 10-week moving average versus Baidu here. Okay, Baidu's already ran to its tops. Yeah, 52-week highs can be made. I didn't say that they can't. But what I am saying is that this is the only way that we can trade it. We can't trade it any other way. And this will be the risk on and risk off. So I've got upside volatility and I've got downside volatility. Both dollar risk wise, we're right in play for a big move, and we get to take advantage of it. Heck, if we're on this side here, it would be great to watch it drop $40 because these are going back up here. I'm going to make a lot of money. I got 10 contracts up here. They drop that thing $40. These are going to come back up here. They're going to get inflated on the opening. I'm going to sell them. So what if they only go to $10, $12? I make a lot of money. Now, on the upside over here, though, on the 180 call for that time frame, is that there isn't that much data on them for the August contract, and the ranges here are quite different. And so what the upside would be here would be if I had 10 contracts down here, and let's say I paid, I don't know what we get in tomorrow. They were down here, the low was $1.27. So let's say I had $1,200 here. I can lose $1,200, all of it here. So what? But if I'm making 8 or 9,000 over here, I deduct my loss. I still come out a winner, and I'm still in Baidu on the after hours earnings report. Big trade Monday night, 7/25/2011. Baidu's earnings. We've done all the mathematical formats. We've got the double tops into the earnings. Any upside in this one, I'm going to tell you why we would sell this one. If we get an upside move in after hours and a big gap that Tuesday morning when it opens, let's say it is that scenario, then we have to unload the call right away in this case. And the reason why is because I'm already at a 52-week, approaching a 52-week high, and I'm already approaching not a totally, doomsday of being overbought. I mean, this thing could go up. The opening gap will send this percent DS at an extreme overbought process again. Of course, you want to be selling into that. Have I answered your question?